Hey everybody, this is Tony with the Assisted Band Director. It is another payday. It's one of those few times where my wife got paid on Friday of last week, and then my paycheck actually came in early today. So this will be the next video on um, the financial planning for your retirement through Robinhood. Um, really quickly, before I get started, I do want to encourage you, if you haven't started one of these and you want to, I will post a link down here at the bottom of the description, and if you click that link and start an account, you will get a free stock, and I will get a free stock. So free money. You can turn around and sell that stock and buy what you want with it. All right. So I made a couple purchases today. The first one that I purchased was ARCC, which is Ares Capital Corporation, which is it's a bank, um, and uh, roughly $20 a share. One thing I did forget to do in my last video was talk about the dividend rates for everything. So 1957 is what it's selling for right now, and gives a yearly dividend yield of $1.60, which is a little over 8% dividend yield, which is pretty good. So I did buy one full share of that, and it was a bad day on the market for a lot of my stocks. All these that are red means that they lost money today. But that's okay, because I'm in this for the long run. But went down 17 cents today. All right, the second stock that I got was Walmart. Walmart, everybody knows Walmart. Of course, their average share, let's see, runs for about $139. And again, with Robinhood, you can get fractional shares. So I put in $20 towards a fractional share, which got me 0.14 of a share. That one also went down 2 cents. All right, the next, let's see, really quickly, let me pull up Walmart, show you what their dividend rate is. All right, they pay $2.20 for a full share, so I won't get that because I don't have a full share, which is roughly 1.56%. Now, usually, not always, the companies that are growing more have a lower dividend rate. The companies that aren't growing as much pay a higher dividend. So if you look at a company that's like Tesla or Amazon, huge companies that are growing like crazy, they don't even pay a dividend, but you're making all kinds of money on the growth of that stock. And then other companies like Coca-Cola or AT&T, which I got a couple videos ago, not really growing so much, but they still are massive companies. So all of the profit that they get, instead of putting it towards growing more, they just pass it back to the shareholders. So you can kind of pick your poison with that. All right, so the next one that I got, sorry, I've got a lot of tabs up here, was Tate. Okay, and Tate is one that I've been looking at for a while, but never really pulled the trigger on it. It's a fairly inexpensive stock, $4.20 right now. Okay, and Tatron Components engages a supply of original design and manufactured electronic components, the distribution of brand name electronic components. It distributes discrete semiconductors. Okay, and that's kind of what drew me in towards that, because if you don't know, there is a massive semiconductor shortage right now. So much, in fact, that like Apple's having to pull back on their production of iPhones, and a lot of car companies are having to limit the amount of cars they can make, because there's just this huge shortage of semiconductors. So I figured I'd jump in on this really inexpensive stock and just see what happens. And I got 2 shares of that, since it was only, under $5 each. But it took a massive hit today too, and I'm down 36 cents on that. And then the last company that I got was PNW, which is Pinnacle West Capital Corporation, which is a utility company based in Arizona. And Arizona is one of the fastest growing states in the nation right now. And as more people move into there, they need more energy for their utilities. So this company has been growing for a while now. See, I forgot to do the dividend rate. One of these days I'll figure out how to do these videos, guys. All right. So while those are loading, because of course my internet's going to be slow today. Quick update on Dogecoin. Okay. Right now it is at just over 39 cents. And if we look at the weekly growth, it started off April 12th, it was at 7 cents. And even before then, it was dirt cheap. And you can just see how it's been going up and down. Very, very volatile. But I ended up buying a few more shares. So I'm at 119 shares, which today I've made $5.79. And my total return is $12.42. And as you can see, that's changing every second. So it's moving around a lot. All right, so Pinnacle West pays a dividend of $3.32, which is a dividend yield of 3.91. Now, I did not get a full share. I got 0.61, so I got a little over half a share because that's what I bought the rest of my funds with. And then Tatron pays 16 cents, which is 3.66%. So not bad for a stock that's just over $4, and you still get a 3.66 rate. Okay, so those are the stocks that I bought this week, or with this paycheck. Really quickly, I haven't really gone over what this column right here is. There are 11 different sectors in the stock market, and it is always a good idea to diversify or spread out your stocks. So right now I'm kind of heavy in information technology. I've got Apple, I've got Microsoft, and now I have Tatron. I've got one communication services, that's AT&T. Probably the next paycheck I get, I'm going to buy some Verizon. So I've got two in that sector. I've got Walmart for a consumer staple. I've got Procter & Gamble for a consumer staple, and Kimberly-Clark. And I've got Johnson & Johnson for healthcare, Pfizer for healthcare, and then I just got utilities with Pinnacle West today, and Ares Capital with financials. Oh, and I missed one, industrials, Lockheed Martin. Okay, so I'm kind of spread out over the sectors. I do need to try to get a materials. See, I need materials. I need consumer discretionary, and I don't remember what the other ones are. And I've also got real estate with Realty Income. But if certain utilities take a hit, like with COVID, the consumer discretionary sector really took a hit because people couldn't really go out. But consumer staples were still, hanging in there. Obviously, the financial crisis of 2008, all of the financial stocks took a big plunge. So if you've got all of your money in one sector and something happens that affects that one sector, you can be in trouble. So it's good to spread it out. Now, one thing you can do if you don't want to worry about having to do research on all these individual stocks, okay, there are things called ETFs, okay, and they stand for Electronic Transfer Fund. I don't remember exactly what the acronym is, but they have all kinds of ETFs, and it's kind of a modern day mutual fund. But with a mutual fund, you usually have to put in a certain amount of money up front. You can join this mutual fund if you buy $1,000 worth. Well, with an ETF, you can do, whatever you want. And with Robinhood, you can even do a fractional share with this. But what ETFs do is they kind of diversify everything for you. Now this one I'm looking at, DGRO. This is an iShares Core Dividend Growth ETF, and this is what I have in one of my Roth IRAs. It does have an expense ratio, so you do have to pay in a little bit to do this, but it's usually taken out during your dividends, so you don't have to worry about actually paying them. They take it out of your dividend. But I'm in Yahoo Finance. I do a lot of my checking through Yahoo Finance. And then you hit this holdings. Okay, and this is going to show you, I think, the top 10 stocks that are in here. Okay, it shows you whether you've got stocks or bonds in it. Here's the sectors that I was talking about earlier. Okay, so it's got a little bit in materials, a little bit in consumer cyclical is the same as consumer discretionary. Got 19% in financial services, nothing in real estate. Okay, consumer defensive is the same as consumer staples. Healthcare, utilities, communication. Don't really have anything in energy. Industrials and technology. Okay, so it's kind of spread everything out for you already. And then you can see exactly what companies are in this. Okay, so 2.95, just under 3%, is in Microsoft. And you've got Apple, Johnson & Johnson, Pfizer. So a lot of these are companies that I've already gotten. Verizon, JP Morgan, Procter & Gamble, Home Depot, Merrick, and Cisco. Okay, and this is just the top 10. I'm sure you can do a search somewhere on here where you can see exactly what everything is. And there are ETFs for everything. There's ETFs for sports gambling. There's ETFs for cannabis stock. There's ETFs for clean energy. There's ETFs for whatever you want. ETFs that are specifically for each sector. So you could have a sector that's just for ETFs that's just for utilities. I mean, there's a ton of them. And one thing with Yahoo Finance, if you scroll down on the right side here, it says people also watch. So you've got all these others that are very similar to this one. Okay, SCHD is another popular one. Yeah. So the DGRO is about $50 a stock. And I actually bought one more of those for my portfolio, Roth IRA portfolio today. But here's another one, SCHD, that's also really popular. It's a little bit more expensive, but it's got, going back to the holdings page, okay, again, it shows the weightings for everything. And then see, this has got a couple different things for its top 10. Home Depot, Texas Instruments, Amgen, Cisco, Broadcom, Pepsi, IBM, Pfizer, Merrick, and Coca-Cola. So you can kind of find something that works for you. You pay a little bit with it. Exchange Traded Fund is what ETF is right there. Anyways, so that's another option that you can do if you don't want to have to deal with the hassle of all the research. Another popular, I see this pop up all the time for stuff that people want to put all their money in. With an ETF, you can put a lot of your money or all of your money in one or two ETFs because it's spread out so much. But this is the Vanguard S&P 500. The S&P 500 are the 500 largest companies in the United States, and this is just a little bit of all of those. So if I do the holdings for that, okay, again, it still breaks everything down, with the biggest one being technology, which makes sense because a lot of the technology companies are booming right now. But you've got Apple, you've got Microsoft, Amazon, Facebook, Alphabet, these are Google, Tesla, Berkshire Hathaway, that's the I can't think of his name now. Anyways, Warren Buffett. That's his company. And then JP Morgan and Johnson & Johnson. So again, you can look for whatever you want and then just start dropping money in there. See, this one's a little bit more. That's why I've never really been able to do this. But now that I have Robinhood, I might buy a couple fractional shares of that. But I think that's going to do it for this video. So far, I did forget to show you my overall portfolio. Show you how everything's doing. All right. So this is what happened today. Okay, so AT&T went up, Realty Income went up, Apple went up, LMT was just barely down, but not enough to register on here. Pfizer went up again. Pfizer's been doing pretty good here lately. Procter and Gamble down, Microsoft down, Johnson and Johnson up, and then all the stuff that I bought today went down. Dogecoin is up $6 today. And then if I go to here, this shows you what everything's done overall. So I'm up $3 in Realty, up almost $1 in Pfizer, up 80 cents, Apple, up in Johnson and Johnson, and then everything else is down. Okay, with my biggest loser right now being AT&T, down 52 cents. But if I go to this, see, with all this red, I've got a lot of stocks that are down, but overall, I'm still up $3.30, which is still up 1%. So, and again, with a majority of this only having Friday and today to really work on. So, time in the market is always better than timing the market. So I don't really worry about the day-to-day stuff. I go in and I buy my stuff, and I'll be holding these stocks for years and years and years and years. So if you like this video and you made it this far, I appreciate it. Make sure you like and subscribe and let your friends know about it. I will be releasing some more videos this week. I'm going to try to record a couple more of them today, and try to get more band director specific things going on. But that'll be all for today. Thank you and have a great day. Bye.